and market conditions. So Justin, we'll start with you. Give us your thoughts on last week's market action and how we're set up for another week of trade.
Well, the thing that was really interesting about last week, of course, we had so many of the big tech with earnings coming out, and there just really did seem to be this rotation under the surface. David Ryan, in fact, tweeted out how he was seeing a lot of action in the financials and the home builders. So you've got this little and the materials as well, like steel stocks and everything. So those have been coming on a little bit stronger, while some of the larger tech was taking a little bit of a break in some cases. Amazon's move on Friday was a little bit more of a break, I guess. But at this point, there's still nothing wrong with the indexes. They're not giving up ground. They're I think still looking very healthy. And again, what can be tricky though is that rotation underneath the surface can sometimes hide a little bit about what's going on in the indexes
That's
under the
exactly
surface.
right. Yeah, and Scott, I want to get your thoughts as well. How are you positioning yourself for this new week of earnings and maybe some of the rotation that we saw, or at least a move back into strength at some of these groups that had been leading earlier in the year, like Justin was talking about? And you're on mute. You're welcome.
I was typing frantically. I'm a terrible typer, and I was like, I bet they can hear that. So
not
trying to put out a fire, of course. The indexes are fine. I mean, there's nothing you can say about them at this point. The nice thing is I don't have any mandate that I have to beat the indexes. I can stay under invested if I want, and sometimes I can stay over invested if I want. So, I try not to pay too much attention to them, but you don't want to give up on them either. I'm torn. We've talked about this 100 times. I think the indexes are not as good an indicator in this cycle we're in right now. I think there's a lot of undercurrents that go on, and the indexes can fool you if you're just staring at them, but you should look at them a little bit. So I'm not 100% invested in my cash accounts. It's the easiest way to look at it, but I'm fine if the market goes up and I trail it a little bit. It doesn't bother me. I don't have to. I have one client, and so I'm not worried about what my client thinks.
Yourself?
Yeah, exactly. I have, there are a lot of stocks that I like, and I had a few names that I liked this weekend that were different, like Nucor,
right.
Deere, which I'll talk about, Sky, SKY, which is like a mobile home manufacturer, and not in the traditional sense, but they make smaller, more affordable homes. That looked pretty good to me. And so there's stuff out there, and if I like it, I buy it, and if I'm wrong, I get out. It's kind of how I proceed.
Yeah, and do we still have this feeling of being extended, or are things looking better from that point? Because we talk about how, if you're making new buys when the overall market is extended, that may not be the best time necessarily to be making those new buys, but do we feel a little bit better about that?
Yeah, I mean, a little bit. I mean, the NASDAQ 100, which was the real problem spot, that closed at 4.4% above its highs on Friday. I mean, I don't know where it is this morning. The NASDAQ is not that much at all. I mean, NASDAQ was looking fine. So it's nice to see that. So I feel like, yeah, so the indexes came down, but in some ways that was almost good.
Right.
Certainly on the NASDAQ. And then you have, okay, there were some losers, but there's earnings related losers. There's always going to be earnings losers. So, I mean, it's like, what are you going to do on that? But it felt like there was more of a breadth. We still had more leaders. There was a little bit more breadth. So, I mean, it wasn't like the market breadth is great, but I feel like, we're not. So if we're less extended, a little bit more breadth, some leading stocks out there, I mean, it's not a rip-roaring 2020 mad bull market, but I think the conditions look a little better than they did a week ago. Let's put it that way.
Okay, well, Justin, right out of the gate, let's go to you with ticker YOW, Clear Secure. Give us your thoughts on this IPO stock. We've seen a lot of volatility with IPO stocks, but give us your thoughts on how this one is acting.
Yeah, so I'm not showing the update yet. Oh, there we
There
go.
it goes.
There it is. Okay.
Yeah.
So
I was trying to stall there a little bit,
right,
but
perfect.
go ahead.
Yeah, that's the professionalism right there,
Yeah.
stalling. So this is one that Arusha and I talked about. And Arusha, the point he was making is, look, sometimes you come across these stuff in real life, and
Mhm.
just take a note of your surroundings. And of course, this is at the airport. I just recently did my first trip, for a live event a couple weekends ago to Boston, and I had discovered to my surprise that my TSA pre-check had expired, so my 5 years was up, and I was like, oh my gosh, what am I going to do? And so it was looking very tempting. I saw this clear line that was, all clear. And
Mhm.
I'm like, am I going to have to do that? But it actually ended up being a very short line. So I was not in too much trouble. But this is a IPO. It's formed a nice IPO base. Now, we've been talking about, with IPO bases, we're a little hesitant to buy the breakouts on these, because a lot of times the breakouts have just looked like they were straight up from the bottom and very extended looking. So this is not one that I'm necessarily going to be purchasing at this level, but it's just worth noting that this has, some an interesting look to it. It's got some power behind it. Now, the revenue growth on this is a little spotty. There's so many
Right.
IPOs out there that have really phenomenal revenue growth, and a lot of them, that we've been paying attention to, actually have earnings growth too. So I'm going to go ahead and pass on this one for now, but I wanted to bring it up because it's moving up so much today, and because we
Right.
talked about it last week. It's, I think, still one to kind of keep an eye on. And not only are they doing this airport stuff, but they're also, I guess, trying to get into, like, stadiums and stuff like that. So a lot of different things that they're branching out in terms of using biometrics to kind of get you through lines a little bit quicker.
Now, in terms of this base structure, can you talk about potential alternative pivots within this IPO base
Well,
that you could have potentially used?
yeah, I mean, I would kind of look at the area like right around 47, because it just seemed like that was an area where it was getting a little, yeah. So yeah, right there, yeah, it just
Mhm.
kind of touched that a couple times, and was getting turned away. And so when it kind of breaks through that, that could be something that you do, treat it as actionable. But again, it's a little bit. I'm a little hesitant on this one, just because the numbers aren't there yet, the
Mhm.
fundamentals aren't there yet. So with so many choices out there, especially in the IPO market, Ken Shreve and I did a webinar last week. So if you haven't seen that, the IPO Gold Rush, Ken brought up some really good points about how hot this IPO market is. He used
Mhm.
some research from Renaissance Capital, and you know with so many IPOs out there, I kind of just think, you can steer towards, you can be a little bit more picky with the
Right.
IPOs that you're choosing. You can choose ones that have earnings, or at least very strong revenue growth. So,
Mhm.
if you're one that likes to follow the rules, and everything, there are a lot of IPOs out there that kind of hit all the spots. So
Exactly.
you don't have to feel like you have to break the rules in order to get every last IPO, because
Mhm.
look, some of these aren't going to work.
Right. Which is why I think it's important to talk about this concept of alternative pivots within the IPO base, especially since we've talked about, if you're waiting for the breakout to new highs, that could be even more tricky. And we know how tricky IPOs are to begin with. So now let's go ahead, Scott, and talk about Tesla. TSLA up about 3.6% here, clearing the 700 mark. What do you think about this in terms of being actionable today here?
If you just can't help yourself, I'd rather be long it than short it. That's for sure. But it's a pass for me. I'm just not going to do a whole lot with it. But I can't. I do watch it. I think it's a great proxy for the market, and it's acting fine. It's 700. I guess look. It's a little a little low as far as some type of cup with handle. It's if you did like the percentages, it's definitely below the halfway mark.